year, economic activity data were good in the US. As regards inflation, we had upside surprise at the beginning of the year, then downside surprise, allowing the central bank to grow more confident that they could cut interest rates. Over the summer, we had weaker numbers for job creation, a key indicator of the US economy, meaning that the US economy might be slowing down. So the question right now is to know whether this slowdown will continue, morph into recession, or whether the impact of monetary easing, financial condition easing will allow the central bank to make this wanted soft landing. The situation is a bit different in Europe. As regards economic growth, indicators point to a moderate positive level of growth. The question is with inflation. In Europe, we have a very low unemployment rate and higher wage growth, leading to high service inflation. Too high probably for the ECB to feel at ease that they can lower interest rates at a quick pace. So we think that the ECB will be constrained into its monetary easing. In Japan, economic growth is still good, allowing wages to grow at the fastest pace over the last 30 years. It means that the central bank will keep hiking interest rates in sharp contrast to what is happening with other central banks. In China, the economic situation remains complicated. The crisis in real estate is ongoing and having a big impact on household confidence. The main engine of growth in China remains only the export sector and the industrial sector. It means that a significant stimulus is expected, weighted from the government, but not coming so far. This economic environment remains quite complex. Looking at fixed income market, the expectation is of a very significant monetary easing consistent with a recession scenario. On the other hand, when you look at credit or equities, risk premiums are still very low, consistent with a soft landing scenario. So far, economic data does not allow anyone to have a clear answer to the soft landing versus hard landing answer. The next month will also be characterized by the US election. It is usually a wait-and-see period for markets. So we advise our investors to keep a cautious asset allocation and to be ready to adjust their exposure depending on the forthcoming data.